Hello and welcome to our viewers on Crux Investor and also to the listeners on Cruxcast, our new podcast series. We're being joined by Mark Selby, the CEO of RNC Minerals. Hello Mark, how are you?
Hey Matthew, how are you?
Fantastic, lovely to have you on board. I know you've got a very passionate fan base out there who are dying to hear from you, and they've been sending us in lots of questions, so I'm very keen to see how you respond to some of those thoughts. But why don't we kick off first with a 2-minute elevator view of the company for those who aren't familiar with the RNC story?
Yeah, no, I think RNC fundamentally is a tremendous investment opportunity at the present time. Most junior companies are lucky to have one great asset, and we're fortunate to have two great assets. So there's the Beta Hunt gold and nickel mine in Western Australia. Obviously, the investors who've been following the story were very aware of the Father's Day vein discovery last fall, where we pulled out 25,000 plus ounces out of the size of a living room, that generated that gold at a 40% gold or 400,000 gram per ton content. So again, we think one of the most exciting gold discoveries that's been made in a very long time. The great thing there is there's a massive amount of exploration potential. That's why we acquired the asset in the first place. We're now able to start to drill that potential off, and we've been, we're coming to the end of a 40,000 meter campaign. But from an investment perspective, fundamentally, you've got this massive exploration potential. We've got 4 shears spread across 4 kilometers, that have been barely tested to date. We have this potential for this high grade, repeat of a Father's Day vein, where 150 meters down into each of these shears, where it intersects the sediment layer, we have the potential for more of these high grade discoveries to be made. And then the best part about it all is that there are very few multi-million ounce deposits that have been discovered in low risk jurisdictions. And not only are we in the basically the backyard of Australia's main gold region, we have all the mine infrastructure already in place that we acquired, which cost you $400 million to replace today. So that's Beta Hunt. And then on the Dumont side, we're wrapping up the updated feasibility study on what is the largest nickel cobalt project, development project in the world. It's one of the largest sulfide discoveries ever. We're sitting up in Quebec in the Abitibi next to a pile of infrastructure. And so in a market, I think the market now is beginning to realize how much nickel the world is going to need by 2025, 2030. Glencore just put a report out yesterday saying, we need 1.3 million tons by 2030. And so, Dumont is one of the few projects that's ready to meet that need. So, we're very excited about, what we can do with that asset. So you've got Beta Hunt, you've got Dumont, and fundamentally our team is going to work to whatever way maximizes the value for shareholders for each of those assets.
Well, thanks for that summary. Actually, we did a bit of work before this call to understand a little bit more about the company, and it struck us that you, from the get-go, have designed this not like a junior, but something bigger. There's been a bit more rigor to the planning. It would seem, as I'm saying this as an outsider, there's been a bit of rigor to the planning, and of course, I can't get away from the obvious statement. If I look back to your share price back in beginning of September to now, it's 5 times. So if I was in the beginning of September, I'd have 5 times the value on my shares. That's a pretty impressive type of return. And I think a lot of companies would be very, very happy with that. But can you tell us a little bit about the strategy? I mean, how have you mapped this out? How have you planned it from when you started to today, and perhaps a little bit about where it's going?
Yeah, no, I mean, the board and management team here have come from majors. All of us, generally worked at Inco or Falconbridge at one point in time. I worked at Quadra for several years as well. So, yeah, in terms of approach, we are, looking to try and build out a multi-asset mining company. That was the design from day one when we went public in 2010. Our first key asset was obviously Dumont, which we've taken through to, fully permitted feasibility study complete, ready to go mine. But we realized a few years ago is that, while the EV story is exciting, it's still at that time was still 4 or 5 years away. So in the meantime, we looked pretty aggressively at a range of assets. So we picked up 2 assets at the bottom of the market in early 2016, the Reed copper mine, which we own 30% of, and then Beta Hunt. And so, we were fortunate to take those 2 smaller assets. Reed, we generated 120% return on capital over 3 years, which was a fantastic investment. Beta Hunt, to be honest, we struggled out of the gate with that. But then obviously with the big discovery last year, it validated our investment in that asset, which is, again, created several $100 million of market cap just off that one, particular investment.
Yes, I guess there's a little bit of fortune to that, but there's also, it strikes me, a lot of planning involved to be fortunate enough to make that find. But what are you going to be doing over the next sort of 12, 18 months to kind of repeat that success, repeat that kind of value creation? I mean, is there a plan, and what is it?
Yeah, so we just announced that we exercised the option on that Higginsville property. Again, we had a mine that needed a mill. They had a mill that needed a mine. So, for us, that was a perfect, transaction with some real synergy. That's a word that gets misused quite a bit. But in this case, there is some real synergy between that set of assets, and that'll really allow us to, take Beta Hunt, to a strong cash flowing position and, provide the foundation for it to become, the very large gold mine that we think it has the potential to become. And then on the Dumont front, we are the operator with that, with our partner Waterton. And so, the key there is, that asset right now is fully funded from the cash that exists within the joint venture already. So there's no call on the company's cash to date. And we'll look to partner at JV it in a way that makes sense, for RNC shareholders. If we get a bid for the entire asset that makes sense, we'll sell the asset. At the end of the day, I have most of my net worth in this company. So I am going to do, my focus is on doing what's best for our shareholders.
Well, it's interesting. We did happen to take a look at the buying, and obviously you have been a big buyer over the past few months, and as have some of the other management teams. So I think that's indicative of your view of whether this thing will work or not. And then just on that, I mean, how do you think you're doing in relation to your peers, for instance? I mean, I do want to come onto the Higginsville in a second, but just talk to me about how you think you've done in 2018. And beginning of 2019.
Yeah, I mean, obviously the prices come off in the first half of 2019, but if you look through 2018, 2019, as you indicated, we're up 4 or 5x, over that time frame. If you go back to early 2016, when we made that, shift to pick up those additional assets, we're up, 2 to 3x from that time frame. At a time where the value of most junior companies just continue to erode away, post that date. So. Again, I'd like to think in terms of that, overall time frame, in terms of the value that we've created to date, and again, with Beta Hunt, we're really just getting going. The resource drilling is where it is. We're going to start the exploration drilling now. And again, we want to really show people just how big this gold mine can be. And as I said, we're in the enviable position of having one of the few nickel cobalt projects that's ready to go in a market that's desperate for nickel and cobalt.
Well, yeah, actually, we talked to I think Anthony Maluski last week, the CEO of Cobalt 27. I think you've recently done not necessarily recently done a deal with them. He was very positive about the Dumont project and being involved with that. I mean, how did that deal come about? Who approached you?
So they picked up an existing royalty back in 2015. Again, we've tried to be as creative as possible in terms of some of the financing that we've done, given that the equity markets have largely been closed for most of the last 8 years for development projects. And so they picked up an existing royalty from Orion Mine Finance, and they purchased that back a year ago, February. And I think, in terms of the, endorsement for Dumont, is pretty profound in the sense that, that Dumont royalty acquisition was their very first non-physical metal transaction. So, this is a group that probably spent more time than just about anybody on the planet looking at nickel cobalt assets. And the first asset that they make an investment in is in Dumont. And then, secondly, that they, continue to, I think actively promote it as a mine that they see as one of the few projects that gets built this cycle.
Yeah, for sure. I think he was very, very positive. In fact, we're going to be talking to him about it again quite soon. So obviously all the PR, all the headlines have been about Beta Hunt for the obvious reasons. Father Devane, extraordinary find there. You know, a lot of hard work to get to that point, I guess. Takes a little bit of the limelight away from Dumont. I mean, can you tell us, because you said a minute ago, you said, you know, you knew, you know, 2-3 years back that, you know, EV was coming, but it was going to take a while to get there. Hence, you started looking at other assets. But, you know, tell us about the nickel market and what you saw then and what you see now, and, you know, why Dumont should be something that people pay attention to.
Yeah, no, I mean, again, going back to day one with this company, you know, the reason the group of us came together in 2010 was, you know, we went through a great big nickel boom in 2007 where nickel prices got to, you know, $25 a pound, $50,000 plus a ton. And, you know, what happened at that time was, you know, nickel had this overhang of a bunch of large scale laterite projects that had literally sat around for decades. And with that spike in prices, basically all of those projects that have been sitting around for decades finally got financed and put into production. Now, a lot of those HPAL plants took a long time to ramp up, but basically they emptied out the project cupboard. So, you know, our view was with Dumont in 2010 was, you know, we knew we had to get through 5 or 6 years of nickel pig iron pain as the market absorbed all that supply that was going to come from Indonesia and the Philippines. But once we got through that additional supply, you know, fundamentally nickel demand still very robust from just stainless steel demand at 5% a year. And then on the other side of the equation, you now have this brand new use, you know, with EVs. Robert Friedland, I think, said it best, nickel's the new gasoline. You know, I think we're moving from an oil-based transportation system to a nickel cobalt-based transportation system. So that's going to require vast amounts of nickel. So having a nickel project ready, you know, in a development pipeline that's basically, you know, largely empty, you know, we think was going to create a lot of value over the long term, right? It was not, in 2010, this was not about a quick home run. It was really, you know, building a foundation, building a world-class asset, which takes, you know, more than a few months to do. And so, you know, we think we've got that we always had that with Dumont, and now we're increasingly, you know, we think Beta Hunt has that potential on the gold side as well.
So you've got the world's second largest nickel reserve, and I think 5th largest nickel sulfide reserve, and the 9th largest cobalt reserve. These are, you know, on any level, that's pretty impressive. You've got, I guess, options there, but can you give us a sort of sense of what the nickel market's doing there? You mentioned, I think, in Indonesia, certainly is one of the with the nickel pig iron, etc. I mean, tell us a little bit about the market, again, for those sort of uninitiated in this space.
And there's lots of investors, and for good reason, haven't paid much attention to nickel because, you know, fundamentally it was a pretty structurally, you know, beat up metal. So, you know, through the first half of this decade, you had the supply come from, you know, Indonesia and China, where they took this laterite ore, dumped it in furnaces, and provided, you know, a significant amount of new supply. You had a massive amount of inventories pile up, you know, and that really weighed on the nickel price, you know, for quite a period of time. But today, you know, we've worked through that first wave. Stainless nickel demand continues to be robust. You know, the thing about 5% growth, which in nickel is about twice what it is in copper and zinc, you know, that means you need to double supply every 14 years. So, you know, we need, by the middle of the 2020s, we need to find all of the nickel supply that existed in 2010. And, you know, not only build it, ramp it up and get it into production by 2025, and we're a fraction of the way there. There's lots of nickel plants being built in Indonesia. We need every single one of them. You know, the biggest risk to the market is that, you know, I think, you know, we're going to struggle to find enough supply to meet demand. You know, and if you look back in nickel, you know, again, I think for people who are new to nickel, if you look back in nickel over time, you know, it goes through these massive squeezes, you know, every few decades. So in the late 60s, nickel prices got to $8 a pound in 1968, which would be about $50 a pound today. We had another big nickel spike in the late 1980s. We had another nickel spike in the mid 2000s where we got to $20 a pound. You know, and if you look at the kind of projections that the Glencores of the world are putting out in terms of demand growth over the coming decade, it feels like we're, you know, setting up for another one of those squeezes in the first half of the 2020s.
So how to use a company? Because if I look at other commodities such as gold, if you know the value for investors is usually sort of late exploration development stage. That's when you get taken out. Once you move into production, it's, you know, there's less returns for the shareholders in terms of share appreciation, etc. How do you value this space? Obviously, you've got gold, you've got nickel. There's this curve building of value creation. You know, you've got existing shareholders, you've got potential new shareholders, and you're constantly evaluating where the company is today and where the maximum point of return is. I mean, how do you go about that?
I think, you know, again, you know, you pointed out that we've had this massive run since the fall. I mean, you know, we're up 4 or 5, 4x plus since that time frame, and people think, oh, well, I've missed the boat, you know. But today, you know, at a $220 million market cap, you know, again, at Beta Hunt, you know, the infrastructure that we acquired that would cost you $400 million to replace today. So, you know, if we find any resource, the investor's getting it for zero. And again, given the scale of the shears and the highlighted potential already from the historic drilling that's there, you know, this could be a very large, you know, multi-million ounce deposit potentially at some point in time. And so, you know, if you look at what those kind of resources and hopefully reserves in the not too distant future, you know, trade at, you know, exit at multiple wise, you know, again, you know, that can be a very, very valuable asset on its own. And then on the Dumont side, you know, again, we haven't been in a development cycle for a long time. So I think people have forgotten about what, you know, metrics around what development assets, you know, basically exit for. And again, there's been a few recent examples. So, Arizona Mining with their zinc project in the Southwest United States. If you look at the takeover of Nevsun, those basically both went out for close to 1x NAV. And if you look historically, you know, high quality base metal assets, you know, of the scale that Dumont and these assets are, you know, exit at 0.8 to 1x NAV. And if you look at what our old feasibility study said, you know, we had a $1+ billion NAV. You know, the new feasibility study is going to probably come in. The capex is going to be lower and the NAV is going to be lower, but it's going to be in the same order of magnitude. And so, you know, again, you know, we think there's tremendous value upside, you know, on both those assets from where we're sitting today.
Okay, well, that'll be interesting to kind of get your guidance on that as you move through that process with both assets. As you say, they're both world-class assets. I imagine you're on quite a few people's radar. It's a question of, I guess, when you want to have conversations and what those conversations, you know, mean in terms of value. Can I come back to Beta Hunt just momentarily, if I may, and then if we can talk about Higginsville. So Beta Hunt, you've obviously got the farthest day vein. You extracted several very large, high-grade rocks, which you have been on tour with. I've seen them live myself here in London. Very, very impressive. But I guess you've extracted the sort of, or have you extracted the maximum PR value from those now? Are those things which are now going to be monetized?
You know, we did, you know, take them around the world because, again, you know, to be able to generate that amount of PR and exposure, you know, is, again, companies don't get that kind of opportunity every day. And so, you know, when you're the feature Korshak exhibit at the BMO Mining Conference, which is the first time that we've been invited, you know, and you've got people who've run, you know, I won't name specific names, but, you know, guys who ran, you know, some of the largest mining companies in the world crouching behind one of your giant rocks, taking a selfie with it, you know, to be able to have 15 minutes of discussion time with them, you know, that's, those are invaluable. And again, you know, that's been repeated time and time again with, you know, a number of the larger mid-tier gold producers, a number of the largest mining companies in the world. So, you know, it's tremendous exposure for the assets.
No, it's very interesting to see. I think people come quite childish when they sort of see those rocks. They behave in a very different way. But let's talk about Beta Hunt. So Goldfields and St. Ives. Are you in any discussions with them?
So the asset had some option potential for some of the adjacent ground underground. Mm-hmm. You know, again, at the right time, we'll re-engage with Goldfields to see if there's any interest there. You know, fundamentally, we have this ramp that goes down into the heart of that system. And so, you know, there are areas, you know, adjacent to the property that would make sense to access from that ramp. So, at the right time, we'll resurrect those conversations with Goldfields and hopefully, come to a deal that makes sense for both groups.
Right, and obviously with Higginsville, with the St. Ives operation as well, is that on the table? Is that part of the thinking?
Oh, in terms of with Higginsville, just have from having a mine mill combined is a much more attractive, acquisition target, and the reality is, unlike the North American market, unfortunately, where the mid-tier gold guys have been, have struggled for, quite a while, the Aussie market, you've got a bunch of mid-tiers that are fully cashed up, have, paper that's, very well valued. So again, I think, once, we get through these next few rounds of drilling here and really start to prove up the scale of resource that we think we have, we're going to get more than a few knocks on the door from these mid-tiers who bought a bunch of old gold mines and that are, facing production profile issues. Whereas we bought an old nickel mine that happened to have a brand new gold deposit underneath it.
Yeah. So let's get on to Higginsville, because I think everyone wants to understand your thinking, the process, why you structured it the way that you have. So why don't you give us the run through, and I'll perhaps pick up on some of the questions.
Yeah, so we're picking up Higginsville for $50 million, half 50 million Australian, half in cash and half in shares that Westgold will have to hold on to for a period of time. When we announced that we had the option, we did the equity, what we believe will be the equity component that we need to satisfy that $25 million payment. And, we've gotten very attractive terms on a bunch of very non-dilutive type financings, that we expect to have in place by the time we're ready to close the deal in early June. Again, fundamentally, when we bought Beta Hunt, the plan was, start drilling it, get a long-term milling solution in place, and at the right time as well, we'll be talking to the royalty company about reworking the royalty so that we get to a number that makes sense, hopefully for both of us. And so, when the Higginsville opportunity came around, there's only so many mills that are already in place, that close by, and so. Again, to build that size mill new today would probably cost you close to $100 million. So, a $50 million price tag, was much better than buying it new. And then in addition to the mill, we get a significant land package on one of the most prolific gold camps. Yeah. And so, any of the resource value and the operations which will be coming online later this year from Baloo and so forth, that's nice. Easy to process, good grade for an open pit, oxide ore, and so that blended with the material from Beta Hunt makes a lot of sense. We save $15 a ton versus what we're paying at Beta Hunt right now, so it doesn't take too many years of just the milling synergies alone to pay for the acquisition. Never mind.
So tell me about the numbers there. So it's $50 million. Yeah. You've obviously done the math, worked out that's good value. Yeah. You're saving $15, which is great. But can you tell us a bit more around the thinking of the way that you've structured it in terms of the cash and the shares? Obviously, with the share price as it is now, it's a little bit lower than it was, just after Christmas. Do you look at it as a case of, money's the cheapest when you can get it? I mean, do the deal now. Could you have waited?
No, but I think if we had waited to do we did the equity component when we announced it, because again, we wanted to take away sort of any sort of equity overhang that's there. I think when we announced that, and again, hopefully we're in a place where it is completely non-dilutive financing, that I think that will, really help the story going forward. In terms of doing the deal when we did it, obviously you'd always, there's the best time to do it, and then there's the time when the asset's available. So, the asset was available. It was the right, it was the right time to do it, and we chose a structure that we think made the most sense for both investors, and we're glad to have Westgold as a large RNC shareholder here going forward.
Right.
And Peter Cook quite likes the Beta Hunt mine.
So how quickly does something like that pay for itself? I mean, $50 million is a lot of money, right? So
yeah, if you just look at the milling synergies alone, if you just assume, Beta Hunt's going to produce 2,000 tons a day, just the milling cost savings versus tolling, you're looking at $10 million a year. So if we do nothing else other than get milling cost synergies, then it's, paid for itself, in just over 5 years. If you, and again, at a higher mill rate, that cycle, comes in, much shorter. But then on top of it, again, we have, all of that resource that's there. We will have ounces coming from that land package. And then being positioned in that part of the camp opens up a bunch of other future opportunities, going forward. So.
Okay, interesting. So tell me, with regards to the land package at Higginsville, obviously that to define what you've got, I imagine if you've got some information from them, you'll want to explore yourself and understand what you've got there. Is that something you'll do yourselves, or do you feel that you may find a partner to help you develop that? I mean, how are you looking at that?
Yeah, I mean, the primary focus for exploration is going to remain beta hunt. That's sort of, job one and job two. We obviously need to resource, basically just develop and expand the existing reserve resource that's there. So sort of, just, some small step out there to continue to sustain production from those areas. But, again, across that larger land package, if we don't have the time and dollars to, relative to beta hunt to do that exploration, we'd look to JV that out to the right kind of partner, to help unlock that, that value that's there.
That's interesting. And again, so if we're continuing along this strategy of building a sort of infrastructure, and I guess with the ultimate aim of reducing your AISC, that's got to be the point of this.
Right? Big time, bottom line. Yeah,
right,
yeah.
okay.
And again, the lower your processing cost, the more resource potential it opens up for you.
For sure. So what are the other type of infrastructure type acquisitions or builds, or other types of acquisitions that you've been considering? Not necessarily specifics, but what have you been looking at?
Yeah, no, again, I think, with beta hunt, it makes sense, given the geology and the location, to look for things, that are, nearby that asset. And there are other things that we've looked at in the past that are, nearby. I think right now it'll take, we'll focus on consolidating those two assets and extracting, all the value we want to get from there. But, again, if an opportunity to infill, a nearby opportunity that can provide feed at low cost, into that mill, those are the kind of things that we'll continue to look for, in that part of the world. And then on Dumont, the focus is really going to be on finding a funding partner to take it into construction, as quickly as possible. Sorry,
I will get on to Dumont. I just want to very quickly finish off on beta hunt, because it's obviously there's a lot been going on, and you've done everything at such an accelerated time frame. It's been quite impressive. On the AISC, what are the other things that you're looking at reducing the AISC? Because the AISC's, around sort of $1,100 at the moment. You need to get that down. What's happening?
Yeah, no, I mean, the key things going forward, one's obviously the milling cost. Two is going to be scaling up the mining operation there. Again, there's a bunch of fixed costs at a mine. If you can, increase the rate you're mining at, that's going to help bring down those costs going forward. A lot of the drilling results that have been exciting in the Western Flanks area, the structures look like it's getting quite large, and that gives you more flexibility in terms of being able to use lower cost mining methods to pull that ore out. And then, as I mentioned earlier, we'll be looking to, have discussions with the royalty company at the right time in terms of, is there a change to that royalty structure that makes sense for both of us?
Right, and I mean, he manages you mentioned technology there. I mean, he manages, is that an outsourced thing, or do you have your own in-house team managing the technical component?
Oh, in terms of the mine itself, we have our inside technical services group. So,
right, okay, great. So, okay, let's get back to Dumont. It's a huge operation. You talked about JVing, finding the right partner to JV with. You've begun conversations. I mean, where are you?
We've had discussions. Again, given our relationships in the nickel industry, we know all the leading players in Japan, Korea, and elsewhere, and so nickel prices spiked in 2014-15 briefly, but at that time, we advanced discussions with a number of groups to provide different components to the financing package. Today, it's just a matter of we've kept a number of those discussions warm. So it's just a matter of, once this updated feasibility study out is, those will sort of kickstart discussions, going forward.
So when that's due out, Q3 of this year?
It'll be out this quarter at some point.
Right, fantastic. Okay, so everyone's sort of sitting back, waiting to see what's happening. So how much time are you allocate? I mean, I look at the board, and they've got a lot of advisors there. It's grown rapidly as well. Some pretty big names on there. I mean, how much time are you allocating between the different assets? Because you've also got 3 different exploration assets as well, haven't you?
Yeah. No, the key thing there is, again, I mean, we have people and teams are dedicated to each of those asset groups. So, again, given the activity and the focus of the company right now is gold and Beta Hunt, I'm spending large majority of my time on Beta Hunt right now. But there is a block of time on Dumont, and then again, we've got some great people with Dave Christie running Orford. He doesn't need too much help from me in terms of driving that asset forward.
Okay. So what I'd like to do, and I know we don't have much time today, but I'd like to come back to maybe have a conversation with you another time around the technical component of the assets, and perhaps that's something we can do with your head of geology,
sure,
etc. But with the time we've got left, can we talk about the finances and financing? So you've announced recently a financing, $12 million. That was, why did you do that? And, what are you going to do with it?
Yeah, so again, we had this coming, $25 million potential payment if we had to exercise the option.
Right.
Again, the risk of announcing an option to do something without the financing fully in place at that point is, the market, sells off in advance thinking that you're going to come to the market with a big raise. So we thought it was important to do that raise, at that point in time. If the deal did not go forward, we'd be able to use that cash to do more exploration at Beta Hunt. As I've said to investors before, I said, if there's someone like a Cisco owned this asset, there'd be 12 drill rigs going. There's just that many targets to go after. And so, so we put that in place, with that and with the financing that we're, looking at right now. And again, we're making good progress on a number of non-dilutive financing opportunities. We'll have, the cash that we need to complete the deal, and the cash we'll need to continue to move those assets going forward.
And obviously the large nuggets that are at the end of their world tour, perhaps a monetization event there.
Yeah, we're monetizing those, which will feed into our cash flow.
Can you give us a sort of sense of what they're worth? Because I'm not quite sure of how you go about selling something like that.
Yeah, basically, I mean, we're looking at premiums somewhere. We've been offered, somewhere between 50 and 100% type premiums for most of the stones. So, we'll be, working with some advisors to get those out the door sooner than later.
Right. But no sense of what range you'd expect there.
Oh no, well, 50 to 100% premium on top of the gold value.
Right. But do you know what that gold value is?
Oh, so yeah, we do. So I mean, we have almost 4,000 ounces in specimens. So that creates another 2,000 to 4,000 ounces worth of value for us.
We can do the maths. Yeah. Okay. Yeah. Now I mentioned your rather impressive board and some of the names on there, but you've also got some impressive shareholders, not least of which is certain Mr. Eric Sprott. What's his involvement? Is he involved actively in the business, or is he just a shareholder?
No, I think he's just a shareholder. We do talk from time to time, and he also publicly expresses opinions as well. I think the key thing is he likes high grade gold exposure. As soon as the announcement came out in the fall, he acquired his position at that point in time. When we first discovered gold, high grade gold, traditionally where it was found at Beta Hunt alongside the nickel deposits, he had become an investor at that point in time as well. So. He basically came back in and upped his position. Okay.
But I just want to ask,
and he's great, and we're great to have a really great gold investor like Eric involved in the story.
For sure, but he has been vocal in the market. He's said that he'd like more guidance from the company. Do you think that's a fair comment?
Yeah, no, I think it's not typical of a junior to have sort of two major assets and you've got a gold in Australia and nickel in Quebec. And so, I think, investors, including him, kind of want to know where we are, where we're going with both. And I think, once the feasibility studies at Dumont, we're kind of talking about what's going to happen on that front. I think it'll be very clear to investors there. Again, just want to drive home, most of my net worth is tied up in this company. And so, we will, I'm not here to build an empire. I'm here to create value for shareholders. And if it means both those assets get sold by September, great. If it means we have to continue to advance and develop them for another 12 months, then we'll continue to advance and develop them, over that time frame.
Okay, no, I think that's fair enough. So I think your answer would be that it's a fair comment. You're looking to issue more guidance and you're looking to create more value because you're aligned with shareholders.
Yeah.
Right.
Yeah.
Okay.
More clarity around it for sure. And again, I think we have a gold investing base today, and I think for those gold shareholders who are nervous that we're going to sort of cross subsidize things or sort of muck things up a little bit, to be very, very clear, there is a pile of cash in the Dumont joint venture that is funding those activities. And so today, that Dumont is a self-funding entity, self-funding asset at this point in time.
And which is great. I mean, that's fantastic for shareholders. I mean, but when do you think the entire operation becomes self-funding? Because obviously people, they're looking at their shares to go up in value. So self-funding is the moment where things get exciting.
Yeah, no, I mean, I think with Dumont to be able to take it to the next stage beyond the feasibility study is really to a construction decision, and at that point in time, we'd like to have, a big project partner come in and work with us and Waterton in terms of, being able to provide the remaining capital that'll, take it through to production so that hopefully, the amount of dilution that's required to get that project going, will be, very low or zero going forward. Again, we can spin that out into a separate entity. We can joint venture it into a separate entity with somebody else. There's a full range of options that we're open to and looking at. Okay, no,
I think that's good comment. I mean, for me, I guess what I would like to understand is, investors have got high hopes in this company because you've done so much so quickly. It's been really impressive. You feel that you believe in there's more capital, there's more appreciation to come for them because of what you're doing with Dumont, what you think's happening with the EV space and nickel, and you think that people should, continue to support the business. Is that where your head's at?
Oh yeah, no, again, putting my money where my mouth is, I bought my 2 largest single purchases of RNC shares ever value-wise were back in, earlier this year and the end of last year, in the 50s and 60-cent share prices.
Right. Okay.
I was buying them at those prices because I thought the stock was undervalued and can see value from here. So, today we're trading in the high 30s. I obviously believe there's, a substantial amount of upside from here going forward.
Okay. Well, Mark, I mean, I'll cut it short there because I know you're short of time today, but we'd hope that we could perhaps catch up again. I think there's potentially you're in London next week. Might be able to get into some of the detail, and we'll certainly be taking some more questions from the investors out there, potential investors, and perhaps we can address those then. But thanks again for today. I appreciate your time, and see you next week.
Yeah, thanks, Matthew. Take care, sir.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.